Imagine investing in companies that not only make money, but also protect the planet, promote fairness, and drive positive change. ESG and sustainable investing aren't just trends, they're reshaping finance. Today we'll explore how these strategies work, why they matter, and how they can grow your wealth responsibly in 2026. 1. What is ESG and sustainable investing? ESG stands for environmental, social, and governance. It's a way to evaluate companies based not only on profits, but on their impact on the world. Sustainable investing uses ESG principles to guide investment decisions. Environmental focuses on climate change, pollution, and resource management. Social looks at labor practices, community impact, and human rights. Governance examines management structure, ethics, and transparency. Story: imagine you're investing in a renewable energy company that reduces carbon emissions and treats employees fairly. Not only are you investing in a potential profit maker, but you're also supporting positive global impact. Sustainable investing allows investors to align values with financial goals. It's not just about doing good. Studies show ESG-focused companies often outperform long-term due to responsible management, risk mitigation, and consumer trust. 2. Why ESG investing is important. ESG investing is growing rapidly. Millennials and Gen Z care deeply about climate change, social justice, and corporate ethics. Financial institutions are responding with ESG-focused funds, green bonds, and socially responsible portfolios. The world faces massive challenges: global warming, inequality, and corporate misconduct. ESG investing helps channel capital to companies that are part of the solution, while avoiding those that harm the environment or society. Story: Sarah invested in an ESG fund focused on clean energy. Over 5 years, the fund grew steadily, outperforming several traditional funds. Meanwhile, she felt confident her money was supporting companies reducing pollution and promoting fair labor practices. Companies with strong ESG records often have better risk management. They avoid scandals, environmental fines, and employee unrest, which can damage profits. Sustainable investing isn't just ethical, it's smart business. Aligning values with investment choices creates financial growth and long-term stability. 3. Types of sustainable investments. Sustainable investing comes in many forms. 1. ESG, mutual funds and ETFs. Diversified portfolios focusing on ESG-rated companies. 2. Green bonds, bonds issued to fund environmentally friendly projects. 3. Social impact bonds, investments aimed at social improvement, like education or healthcare initiatives. 4. Direct ESG stock investing, choosing individual companies with strong environmental and social practices. 5. Community investments, funding local projects or businesses that promote sustainability. Story: John started with an ESG ETF that invested in renewable energy, water conservation, and fair trade companies. As his portfolio grew, he added green bonds to support climate-friendly projects worldwide. Over time, he realized his investments weren't just growing, they were shaping a better world. Diversification is key. Combining ESG stocks, funds, and bonds spreads risk and maximizes potential returns. Sustainable investing is a long-term strategy that balances ethical considerations with financial goals. 4. How ESG investing impacts companies. Investors wield power. By choosing ESG-compliant companies, you incentivize better practices. Companies know that investors care about sustainability, which drives change in industries. Story: a clothing company faced investor pressure due to poor labor practices. When ESG-conscious funds pulled out, the company revamped supply chains, improved worker conditions, and increased transparency. Its stock later recovered, proving that ethical changes can coincide with profitability. ESG investing promotes corporate accountability. Companies with strong environmental policies reduce costs and risks from regulatory penalties. Socially responsible firms retain talent and build customer loyalty. Strong governance prevents fraud, mismanagement, and reputational damage. Sustainable investors not only pursue returns, they also drive systemic change. Your portfolio can reflect your values while encouraging companies to operate responsibly. 5. Benefits of ESG in sustainable investing. The advantages are clear. 1. Alignment with values. Invest in companies that match your ethical beliefs. 2. Long-term growth. ESG-focused companies often outperform due to lower risks and better management. 3. Risk mitigation. Avoid companies with environmental fines, labor issues, or governance scandals. 4. Impact. Capital supports positive change in climate, social equity, and governance practices. 5. Attractiveness to millennials and Gen Z. Younger investors increasingly demand ethical investments, driving growth. Story: Emma invested in sustainable tech and healthcare companies. Her portfolio grew steadily, outperforming traditional funds, and she felt proud that her money supported environmental initiatives and fair labor practices. Sustainable investing proves that profitability and ethics aren't mutually exclusive. They can coexist and reinforce each other. 6. Common misconceptions. Many believe ESG investing means lower returns or limited choices. In reality, ESG-focused funds can compete with or outperform traditional investments over the long term. Some think it's only for philanthropists. Truth: ESG is a smart financial strategy. Risk management, innovation, and customer loyalty often make ESG companies more profitable. Story: Mark avoided ESG funds, fearing lower returns. After reviewing 5 years of performance data, he discovered ESG funds often outperform traditional indices. By reallocating part of his portfolio to sustainable funds, he achieved both financial growth and positive impact. Another misconception is that ESG is only for large investors. Today, anyone can access ESG ETFs, mutual funds, and even fractional shares of ESG companies through online platforms. Small contributions compounded over time can make a real difference. 7. How to get started. Getting started with ESG investing is easier than ever. 1. Assess values and goals. Identify environmental or social issues you care about. 2. Research funds and companies. Look for ESG ratings, track records, and sustainability reports. 3. Diversify. Combine ESG stocks, ETFs, and bonds to balance risk. 4. Leverage platforms. Use apps like Robinhood, Vanguard, or Betterment to access ESG options. 5. Monitor and adjust. ESG ratings can change. Regularly review portfolios to ensure alignment with goals. Story: Lily wanted her investments to support renewable energy. She started with an ESG ETF, later adding green bonds and a social impact fund. Within a few years, she had a diversified, sustainable portfolio that aligned with her values while providing consistent returns. Consistency and education are key. ESG investing is a long-term journey, but with research and dedication, anyone can build wealth while supporting ethical and sustainable practices. 8. The future of sustainable investing. The future of ESG investing is bright. Global awareness of climate change, social justice, and corporate responsibility continues to rise. Regulations are evolving, making transparency and accountability mandatory for many companies. Companies adopting ESG principles early may gain competitive advantages: better talent retention, innovation, and customer loyalty. Investors increasingly prioritize sustainability, which could boost valuations for ESG-compliant firms. Story: A renewable energy startup leveraged ESG investments to scale operations globally. The funding allowed them to innovate and reduce carbon emissions, proving that sustainability and profitability can coexist. For millennials and Gen Z, ESG investing is not just ethical, it's practical. It aligns with values, provides growth potential, and influences corporate behavior, shaping a better future for the planet and communities. Conclusion: ESG and sustainable investing prove that you don't have to choose between profit and purpose. By focusing on environmental, social, and governance factors, You can grow wealth while supporting companies that make a real difference. Start by understanding your values, researching ESG options, and building a diversified portfolio. Small, consistent actions today can generate long-term financial growth and positive global impact. If this video helped you understand ESG and sustainable investing, hit like, subscribe, and share. Your money can grow while making the world a better place. Start investing responsibly now.